So all throughout this year, especially in the months of February and March, I kept uploading content saying, hey guys, I'm buying the dip. I don't care. I'm going to continue to buy into the fear. And I kept getting comments like this up above, right? You're trying to catch a falling knife, and other people were calling me an idiot. This is going to be the end of it all. You're trying to lose your money. Ha ha ha. Well, I don't want to be that guy, but the S&P 500 represented by Vanguard's VU, we're back to all-time highs. At this point, the stock market does not care what's happening because the big banks, by the way, we went over this in my earnings podcast earlier this week. But anyways, the big banks have been reporting their earnings and they've been crushing it across the board. So it's business as usual, baby. VU is $643 a share, an ETF that represents the stock market. Fun fact, it's the highest priced it has ever been in its existence. And to be honest with you, I'm not surprised. We saw the exact same thing play out last year in April 2025 when the tariffs were announced and everybody lost their minds. This year, yeah, it's the global supply chain when the oil crisis with the Strait of Hormuz and everything else, but also March to April 2026. The same thing played out. The stock market sold off. Most people, I'm not kidding, even big money, millionaires, amateur retail investors, they folded. They sold at a loss and they went primarily in cash. While at the same time, when I saw that happening, I was like, dude, I have to remember what my quote-unquote mentor said. Be fearful when others are greedy, and greedy only when others are fearful. When the fear and greed index was a single-digit number at like an 8, 9, dude, I went all out. I started dollar cost averaging into my favorite positions, so I was like, dude, in the grand scheme of things, it's all gonna be okay. And lo and behold, that's what happened. Like if you sold at a loss in the red in early April, and now you want to jump back in, it's like, brother, what are you doing? Something about me that you have to understand is that I'm not a day trader. I'm not a swing trader. I'm not out here trying to get rich overnight. I'm somebody that regardless of what's happening around the world, regardless of who's the president in office, regardless if my Starbucks barista says good morning or not, or calls me a ma'am by accident, I'm buying. I'm constantly buying regardless of what's happening. Now, obviously, if you're a regular, then you know that I do time my entry points into specific ETFs or stocks in question. But regardless, no matter what the week is, I'm always buying across the board. So circling back to this, even if you weren't buying into the fear, had you just sat and done nothing and let your ETFs, or if you're a passive investor, whatever your positions are, if you just stayed still, it would have recovered in due time. Exactly what I kept talking about time and time again. The stock market repeats itself from history. Obviously, past performance is not indicative of future gains or its future stock price movements. But time and time again, yeah. All that to say, I'm not going to be holding my breath. Maybe this is a dead cat bounce. Maybe this is a false relief rally. Maybe we'll go back into the red. Regardless, I'm going to be right there to dollar cost average into the red days. So if that's the kind of investing that resonates with you, with the long-term horizon and thinking about things strategically 5, 10, 20 years down the road, instead of trying to day trade or trying to make a quick buck, you might as well hit that follow button.